Hey, what is going on, student? I would imagine you're watching this video right now because you are fairly new in your trader development journey, and I would like to be one of the first to formally welcome you to the team and congratulate you for taking the first steps towards gaining a better understanding of the markets. And more than that, you're going to learn about yourself through this process. This video particularly is going to focus on helping you get started with a demo account, which is essentially a practice account to start testing how you actually interact with the markets through a platform called MetaTrader. Now, there are other platforms out there beyond MetaTrader that you could use. MetaTrader, in this specific instance, we're going to be taking a look at the mobile version. It's available in both Apple and Android, but there are also computer versions of MetaTrader, and they generally are offered to you through your broker. To get started, you're going to need to search for MetaTrader in the App Store. This video, we're going to be focusing about MetaTrader 4. Okay, there is MetaTrader 5 available as well. There are some differences between the two, and I'm not going to explain them to you here now, but the differences are not significant enough for you to worry about whether you use 4 or whether you use 5. And so I would encourage you to just use 4 for now. And so once you have it downloaded, you're going to move into the next part, which is creating a demo account. And so you can see in front of me, I have the option to open a demo account. We're going to just use the MetaQuotes demo that shows up when we are selecting our new account. You can put in a name, you can put in your phone number, it can be a real number, or it can just be a combination of digits, it's up to you. Same thing for the email. Under account type, we're going to leave it as Forex USD. Under leverage, while there is different options, we can just leave it at 1 to 100 for now. Leverage is basically the ability to multiply the amount of money that you're trading with. And so it'll allow you to take larger trades without having that much money in your account balance. So for example, say you have $1,000 and you're using 1 to 100 leverage, it would actually allow you to trade roughly a $100,000 position, which is a standard lot. Okay, and we'll go even deeper into that here in just a moment. For the deposit, we're going to use 3,000 for this example. If you create your demo account through the computer, it's a very similar process. And what I would encourage you to do is choose a deposit amount that is as close as possible to the amount of money that you would feel comfortable with getting started with once you do put real money into the markets. Now, it's very important to know that this video is for educational purposes only. It is not investment advice, and you need to understand that there is real risk involved when you do start trading in the markets. And we encourage all of our students to start small, and then that way, even if you make mistakes or you blow up your account, you're not losing a significant amount of money. And when we say start small, I'm talking about $20, $50, $100, just so you can start to understand what the live market experience is. But for now, until you're comfortable with taking those steps, always, always, always utilize the demo account so that you can practice without having the monetary risks. And so after you filled out the information, you're going to click register. It's going to give you a login, the password, and a investor password. Now you can copy this, you can save it somewhere in case you make the account initially on your phone and you want to log into it on your computer, vice versa if you make it on the computer and you want to log in on your phone. Once you are in to the app, by default, it may not look like what you're seeing right now. It's probably going to look more like this. Okay, maybe there's going to be less currency pair options, maybe there's going to be more. And it may not be in dark mode. It may be in light mode by default. Now, when you're looking at the simple format, it's basically showing us right now a currency pair, Euro, US dollar. It's showing us the price that we could enter a trade at if we were to buy, and it's showing us the price that we could enter into a trade if we were to sell. When we take a look at the advanced, it goes a little bit deeper. It shows us the current spread, which is the difference between the price that we could buy, which is represented on the right, or the price that we could sell, which is represented on the left. It shows us the time, and it also shows us what the low and the high of the current day is. And so you can choose whether or not you want to use the simple or the advanced method. If you wanted to add currency pairs to the list, you're going to click on this plus button in the top right. Now, depending on which platform you use to open your practice account, or if you're using a live account, you may see more options besides Forex. You may see cryptocurrencies, you may see stocks, you may see metals like gold and silver. But if you wanted to add something, you're going to go and you're going to click on the various plus buttons, and it's going to allow you to basically go and see more currency pairs in your list. You might have noticed that when I clicked, it brought up a page that looks like this. This is essentially just more information about the currency pair. The main thing that you need to pay attention to right now as a beginner is the bottom two categories where it says swap long and swap short. Swap is essentially money that you pay or money that you get paid for holding a trade into the new day. Now, the new day on most brokers is classified as 5 p.m. Eastern. So 5 p.m. Eastern. If you are on the GMT time, that would be 10 p.m. GMT. And if you're in another part of the world, you're going to have to convert that. But essentially, when New York session comes to a close, most brokers are going to use swap. And so with this example, with the Great Britain pound against the Japanese yen, if we were in a buy position going into the new day, for every standard lot that we would be trading, we would get paid $2.12 for holding that buy into the new day. If we were selling, for every standard lot, we would be paying $3.05 to hold that trade into the new day. And that number, where the decimal is, that would change depending on your trade size. So if you were trading a mini lot, which is a 0.1, and you were buying, rather than getting paid $2.12, you'd be getting paid 21 cents. You would just be moving the decimal place. And you can imagine same math for selling. If you had to pay swap, and every single different currency is going to offer you a different swap. And so that's something that you can also be mindful of. Coming back to the list. Now, you can access that same information on the details tab. We can also go over to the chart, When we're on the chart page, it's going to show us candlesticks. They may be different colors than what you're seeing now. This is all fully customizable. In the top left-hand side, where it says H4, that is the time frames. And so under the time frames, when I click on that, there's a variety of options. We have M1, M5, M15, M30. The M stands for minute. So if we were on an M1, every single candle represents 1 minute of trading action. If we are on a M15, every single candle represents 15 minutes of trading action. The H stands for hourly, the D stands for daily, the W stands for weekly, and the N stands for monthly. So the time frames are very important. And as you go through the training, you'll learn more about how to use the different time frames, what the advantages of the smaller time frames are, what the advantages of the larger time frames are, how to piece together the bigger picture with the daily price movement. And one other thing to make a quick observation of, you see the two lines that are on the screen right now? One of them is like a gray color, and there's a price on the right that says 1.63657, whereas the other is a red, and that says 1.63740. Those two lines represent the spread. So if I were to click trade, and if I were to buy right now, where that red line is showing us the price that I would actually be buying into the market at. And so that's why as you go and you start trading, you're going to find that the majority of the time that you take a trade, the minute that you click buy or sell, you will immediately be in a loss, at least on paper, because of the spread. So it's that visible difference between where we can buy and where we can sell at. Coming into the different order types, we have instant execution, which essentially allows us to buy or sell at the displayed price. Be aware that if you click buy or you click sell on an instant execution, by the time that your order goes into the market, the price that you were seeing before may have changed. And so you may be seeing the current price displayed as it is right now, but by the time that you click buy, it may no longer be that price. It may be a better buying price, or it may be a slightly worse buying price, because the market is constantly in motion, except during the weekend. And then at that point in time, the market temporarily comes to a pause where we, as retail traders, cannot take new positions. We can't actually buy or sell and get into the market. And if we had an open trade, for instance, we would not be able to close that trade until the market resumes on Sunday at 5 p.m. Eastern, 10 p.m. GMT. There are different order types. We have the instant execution, the buy limit, sell limit, buy stop, sell stop. You can learn more about this in the Academy, in the Level 100 series. It's one of the most basic concepts. You're either entering the market immediately, or you are setting a limit order where you want to buy if and when the price comes down to a level that you're willing to pay. Same logic applies for the sell limit. Okay, and we're not going to discuss the stop orders in this video. The stop loss price, this is a representation of what your maximum risk is. So let's just say that you are an individual that can't constantly be in front of your charts all the time, and let's be honest, I don't feel like anybody wants to be in front of the charts all the time. Trading is a vehicle that allows us to gain freedom. It's a vehicle that allows us to generate income from our phones, on the go, from a professional workstation. It's something that allows us to create income so that we can spend more time doing the things that we love. And so the stop loss is that maximum risk point for those times where you can't be behind your screen. It's basically telling the software to automatically close out your trade if the price goes to that point. And so it will automatically cut your loss for you. Keep in mind that price can exceed your stop loss, such as in an instance where right now it's the weekend. If you were in a trade and you had a stop loss set, and then the market opens on Sunday and it gaps, it could actually gap past your stop loss, and then you'll get filled and your trade will close at the next best available price wherever the market opens. It may be a small gap, it may be a large gap, but that's something that you need to be prepared for. It's not something you need to be afraid of, but you need to be aware it's a possibility. The take profit, this particular level, or this particular parameter rather, similar to the stop loss, the take profit, instead of closing out your trade automatically at a loss when it reaches a certain price, this will automatically close out your trade at a profit once it hits a certain price level. And so you can use that to your advantage for those times where you can't be behind the screen. A good general rule of thumb, for every $1 that you risk, aim to make at least 3. It becomes very challenging to be profitable if you're risking $1 to make $1, or risking $1 to make 50 cents. How much you risk compared to the potential reward needs to make sense. And that's something that you're going to learn about even deeper as you progress through the course, the content within the academy, as well as get access to the live education that's made available to you through the Trade House and other educators at the Mastery Academy. There's a little crosshair tool that you can use to explore candlesticks. You'll notice at the top across the screen, it says Euro odd. That is the symbol or the currency pair that we are looking at right now. It says the time frame, and then there are 4 different prices. That is the open, high, low, and current price, or the closing price of whatever candlestick you're hovering. So notice as I move the crosshair, those numbers change. The button that looks like an F, this is the indicator section. I personally don't use indicators at this stage. If you want to explore them, there's nothing wrong with that. All that I would encourage you to do, for every indicator that you put on your chart, ask yourself, does it make it easier or harder to understand the price movement? And if you're going to use an indicator, it's very important to have an understanding of why you're using it. Otherwise, what's the purpose if you don't understand the information that the indicator is displaying to you? The button beside the F that has a triangle, a circle, and a square, these are different objects. So you'll find things in here like if you wanted to draw a line under the chart, you could do that. You could place it. If you wanted to move it, you could click on it and move it. Okay, you can also add squares if you wanted to highlight certain things, or ovals. The button that says F, that is a Fibonacci tool. So it's essentially a measurement tool. So with the measurement that I just did right now, really quickly, where the 50 level is, that's essentially showing us a visual representation that from the bottom of the move that I just measured, what we're looking at right now, the middle of that move is where the 50 is. Okay, so it's essentially showing us the percentage of the move that we've measured. It can be very helpful for multiple reasons. The trade screen, this is going to show you your current balance. It's going to show you any open trades that you have, whether they're active or pending orders. It's also going to display to you your margin. And so every trade that you go to open requires margin. Margin is essentially money that you set aside on reserve to open your trades. There is a very thorough and easy to understand lesson on margin in the 100 series of the Academy. So I would encourage you to progress through that portion of the education prior to considering live trading. The history section is going to show you your account history. It's going to show you information such as your account balance. It's going to show you your trades for the day, for the week, for the month. You can look at a custom period of time as well. Now, of course, there's only the history of that $3,000 deposit into our fake practice demo account because we haven't taken any trades yet. If I tried to take a trade right now, it would say market is closed because, again, this video is being made on a Friday night, and so the market, the candlesticks, they're not moving at this moment. If we were looking at a digital currency like Bitcoin, it would be a different story. It would allow us to take trades over the weekend because cryptos like Bitcoin, Stellar Lumens, XRP, Ethereum, these assets don't pause most of the time on the weekend. The reason why I say most of the time is because, of course, your broker, the platform that you use to actually trade the markets, they do have a say in whether or not they allow you to trade them on the weekend. But even if they don't allow you to, it doesn't mean that they stop with their movement. Under the Settings tab, it's going to show you information about your account. It's going to show whether it is a demo practice account or a live account. You can explore all the buttons in here. The only one that I'm going to go into is the charts. You're going to want to make sure that the charts is on candlesticks. You're going to want to make sure that you have the ask line checked. The ask line is that visible representation of what price you can buy at. The reason why it's called the ask line is because the broker or the other party is asking that you pay that much to enter the trade. They're asking that you buy at that price. Period separators essentially would show you when a day starts and when a day ends. So I'll turn that on really quickly and show you. Notice now how we have dashed lines going up and down. Everything that happened between those lines is 1 day. Okay, everything that happens between the lines on the hourly chart, that is 1 day. On the daily time frame, it's looking at a different period of time, and so that's something that you can explore. A big part of developing a better understanding of the markets is exploration, hands-on experience. And so, of course, you get the opportunity to have your hand held and leverage educators with years of experience. But at the same time, you need to go through this process. It's exploration more than anything. And it can be very fun, very, very fun. OHLC, that represents open, high, low, close. So if I turn that off, those numbers that we were seeing previously, okay, they're supposed to go away. So I'm not actually sure why they didn't go away, but that's what that represents. It's basically showing, do you want to see the open, high, low, and closing price on your charts? I am curious now. Let me drop it down off of a daily time frame. So it's still showing it when I click the crosshair. I guess the crosshair automatically shows it regardless of if you have it turned off. Whereas if you have it turned on, see how I'm not on the crosshair and it shows it? So that's what the OHLC is. The OHLC will basically put the open, high, low, and current price of the candle you're looking at on your screen. Unless you're on the crosshair, then it will show up automatically. See, look at that, even me. I'm learning as we're going through this video, and I've been using MetaTrader for years. Data window, you can play around with that one. Colors, pretty straightforward. You can customize what your chart looks like. There are a couple pre-made ones, or you can make your own. Here's my color scheme in front of you. You can take a screenshot of it if you so choose. And if you're wondering how to get night mode, how to get the dark mode, I don't know how to do it on an Android, but on an Apple device, it's going to actually be in your phone settings. You're going to have to go into your settings, find the MetaTrader app, and then there will be a night mode setting within the app. If you have an older iPhone, you may not be able to do that. I don't know. This video is being recorded on a iPhone 11 Pro. But that's pretty much it. When it comes to MetaTrader, it is a retail trading platform. It has some advantages. It has some disadvantages. It's not the best platform in the world. It's not the worst platform in the world, but it is very compatible with many different brokers. And all that a broker is, it is a platform that gives you the ability to trade the markets, whether you're actually trading in the markets or speculating on the price movement that happens via contracts. Depends on the broker. But I appreciate you for taking the time to educate yourself. This video did end up running a little bit longer than I originally anticipated when I started filming, but my intention was to make it educational. For beginners, for you especially, if you're a person that has no experience, then this video has already given you a great foundation for some of the things that take other people months to even be introduced to. If you're somebody that needed a refresher and you checked this out, there are some hidden gems in here for you too. And so thank you again. My name is Zachary Hogan, and I look forward to exploring the markets with you.